Welcome back to the best pro for you. WTI crude oil is falling and it's falling fast. Trading down, actually it tested the territory below the 90 handle after news broke that the US has sent a memorandum of understanding to Iran to formally end the conflict. With Tehran reviewing the deal and the Strait of Hormuz potentially reopening, the war premium is draining out of the market, adding record high US oil exports, and the supply squeeze is fading. So let's look at the charts to see how to trade this. And as always, we're going to do an MTFA, multi-time frame analysis. On the daily chart, first things first, longer term view, we draw our support at 77.50, which is very close to the low that we saw at 79. Importantly, of course, this is more about the depth of that leg to the upside rather than anything else. And notably, we've come to the 78.6 Fibonacci, right? And you might ask, why is that important? It is important when we're looking at tightening consolidations, because it could mean that the 78 and the 23 act as support and resistance. So there is potential for short-term upside if the 23.6 holds. The Bollinger Bands, however, are quite volatile despite flattening, which supports, in a way, a potential pennant or triangle. But the main issue here is that if we lose the 23.6, because there is a tilt on the lower Bollinger Band to the downside, then we're looking at an extension down to around the, let's call it 70. Okay, remember that level. So although, of course, we could see potential bounce here, we have to go down on the 4-hour chart to see if there is conflicting signals. When we go down on the 4-hour chart, we notice something more interesting, that we might be dealing with a triangle instead of a pennant, right? And maybe we're not going to wait for another bounce to the upside, and we might just see because essentially if that were the pennant, what I'm saying is we could see something like this. But now on the 4-hour, we see this low, which really resembles a triangle pattern, which means that 23.6 doesn't necessarily mean it's our line in the sand. We could go as low as 83 and actually as low as 79. As long as we don't take that low out, that can still be a triangle. Triangles and pennants are continuation patterns. Typically, they resolve in further upside if we're in a bullish market, as we are now. But since we are looking here on the 4-hour chart, let's not also forget that we have more like the 4-hour double bottom here on momentum, okay? Which means, again, that we could see a move up to around the 38.2 or the 50. And this is the important level. Why? Well, because we have the median Bollinger Band, we have 99.25, I will call it 100, and we have the 50 Fibonacci retracement. So this is a magnet zone. And as I said, although we could see a move to the upside, that is not necessarily going to be suggesting that we're going to continue higher. There is something more interesting though in this chart. You might have noticed or not. You might have noticed. This level also comes exactly at the previous swing low. And essentially, it's unlikely that we'll go to that level if we don't see this resolving to further downside. Why? Because this is the only way that can be an impulse. Okay? And if it is an impulse, it doesn't necessarily mean that we're going to continue lower or higher. It's just, if it is an impulse, it means that we're probably going to see the bounce after we get the 5th wave down. So essentially, something like this. The immediate test for bulls is whether they can reclaim the cluster, okay? And when that happens is important, because as I said, if it happens now before we're resolved to further downside, then this could be marked as a correction, and we could be looking for higher levels. That zone also perfectly lines up with a 4-hour middle Bollinger Band. Okay, so remember, if we drop down and lose 79.10, the triangle is invalidated, and that means we'll be looking probably for lower territories. Now, all of this is good, but it becomes much better when we look at the 1 hour as well, because this is where we see what's happening also in the short term. So in the short term, it looks like we already have 1, 2, 3, maybe a 4, and a 5th wave down. Now, importantly, and as we always look at the Fibonacci's, the 38.2 comes exactly at the median line. So I would be actually marking that level as way more important for the short term and price action in the near future, rather than the 4-hour middle Bollinger Band. Why? Because if we go higher and we fail to cross above that level, that will probably resolve in further downside. And where could we be heading? Well, if we look at this as the first wave to the downside as well, I want you to see that this leg didn't stop at the 100 Fibonacci. This essentially means that we are unlikely to be looking at a correction, because when moves actually are bigger than the prior moves, especially close to the 161.8, we typically have a 5-wave leg, which means 1, 2, 3, 4, and then 5. So we're looking at 83.50 before we look at a much bigger correction towards the 100 level. Now, this tells us, okay, so these next few hours or sessions are going to tell us whether this move is going to be impulsive or whether it's actually finished. Even though we expect a bounce, it should be short-lived. We're looking for resistance at, as I said, the 95 level, which is the 38.2 Fibo and the 1-hour middle band. For best pro for you traders, the play here is probably a short. We're looking to find potential optimum levels for short around 95, placing stops just above the 1-hour Bollinger Band. I would even go as far as 95 perhaps. And to the downside, we have a initial target at 83.50, then down at the 78.80. However, if price blows past the upper band, this may be a complex correction heading back over 100 and probably new territories, especially if it proves to be a triangle. Trade safe, respect your stops, and I'll see you in the next video.